Welcome everyone to our weekly Forex market analysis call, and this is in preparation for trading for the week of January 29th to February the 2nd, 2018. And before we get started, just a quick disclaimer, trading is a risky business, so please be careful with your money, and you want to follow the general rule of investment. Don't invest what you cannot afford to lose. So please be careful with your money. Markets have been a little volatile since the beginning of this year. There's a lot of political stuff going on. So please make sure you are managing the risk properly and keeping the position sizes small. All right, so let's dive into it now. To start things off with, as usual, we'll take a look at our Forex Factory calendar here. And let's see what's coming up this week. All right, so to start the week off, we don't have a ton of red data. We do have personal spending and core PC price index numbers, so they are orange. So in terms of the orange news, when the markets are volatile, orange news tends to have greater impact on the market. So just keep that in mind. Personal spending is an important number because it shows how the consumer is doing. If people are spending money, that means that shows confidence in the economy. If they start to sort of save money and hoard money, that shows that that consumers don't have confidence in the economy. So that's why that number is important. Trade balance number is always an important number. This is for New Zealand dollar, and it will have an impact of the New Zealand dollar if the number is too far off of what the forecast is. And then we have business confidence number out of Australia that will have an influence on Australian dollar for sure. So we'll keep that in mind. Going into Tuesday here, we have preliminary CPI number. So this is our inflation. So it looks like the number is expected to drop. So we'll keep that in mind. And then net lending to individuals. This is another number. So this is not critical news, but like I said, when the markets are volatile, these orange news tend to have more impact on the market. So net lending also shows confidence. So if people are borrowing more money and banks are lending money, that is good. It shows that everybody has confidence in the economy. And if the number drops too much, then it means that the banks are not comfortable lending money to individuals. That reflects poorly on the economy of the country. Flash GDP number, important number here, consumer confidence number. So this number is another number that the banks will look at, or the markets actually, I should say, pay more attention to this number, because this consumer confidence number, it reflects how people are feeling about the economy, and it kind of ties into the personal spending. If people are spending money, if they feel like they will have their jobs and they'll be able to make more money, they will tend to have confidence in the economy, and they will be spending more. So this will be an important number. And then we have Bank of England Governor Carney speaking. Anytime we have any bankers speaking, central bankers speaking, it will have an impact. So with this case right now, we see that US dollar has taken quite a hit over the last little while, and US dollar has been dropping. So we've been hearing, last week we have World Economic Forum meetings. So there were a lot of comments coming from different officials from different countries. So that kind of was creating volatility in the market. So now at this point, central bankers are very, very important, because we are, ever since the big financial drop there, we saw that central banks kind of took, they were dropping rates. And now we are at that turning point where the monetary policy and fiscal policy, especially the monetary policy, is changing right now. So central bankers are playing a very important role. We have been seeing a lot of countries raising rates. So that's why the focus is very much on what the central banks are going to do, how they view what's going on in the market and how are they going to react to it. Market participants want to get ahead of that. So it drives a lot of market sentiment. So keep that in mind. So anytime we have this kind of any central banker speaking or coming up, having passing comments, it will be important. It will move the markets. And then Australia CPI number, it's inflation number, one of the numbers that central bank will follow. So so that's usually a market driving number, and then mean CPI number. So that will have an impact on Australia. And then we have President Trump speaking. So last week was interesting because we heard he said that a weak US dollar is good for exports. And as a result of that, we saw US dollar take a big tumble. And then President Trump essentially came back and said completely opposite of what he's been saying over the last, ever since he came into presidency, and also what Munchkin said. So he essentially said that US dollar will be strong again, and he's very confident that US dollar will remain strong. So they kind of went in the opposite direction in terms of comments. So now we're going to have to really focus on, President Trump has been very bearish on the dollars. He's been trying to drive the dollar down. He does not want interest rate hikes. He's been doing the tax reforms and all that kind of stuff. So these things he wants to basically drive exports, and the one way to drive export is if your currency is weaker, because then more people want to buy your product. So that's what he's been trying to do. So very important that we pay attention to that. Even though this is in the evening, it can drive markets. And then replays of these interviews and these speeches will have an impact on the market. So keep that in mind. Going into Wednesday here, German retail data, so all of those, we have orange. The big thing on Wednesday would be the non-farm employment change. So that will be very important. And then we have GDP numbers for Canada, another important number. Thursday, we have FOMC statements. So this will be the biggest event of the week for us. Anytime there's FOMC, it will drive the market. Anytime there's ECB statement, that will drive the market. So at this point, they're not expected to change interest rate for the US here. However, what the market will be looking for would be forward-looking statement as to what's going on with the Fed, because there is change in leadership, as well as what their policy will be now that the leadership is changing and they already have done a few interest rate hikes. Market will be looking to see how they speak, what their commentary is, so that the market can figure out what to expect from the Fed going forward. So this will be a very important FOMC meeting, and I expect it to drive the market. So expect volatility in the market during this time. And then we also have crude oil inventories, which will be important for the Canadian dollar. The commodity currencies have done quite well, and part of it has been driven by strong oil. And so we'll have to keep an eye on this, because that will definitely have an impact on oil, and as a result of that, Canadian dollar as well. Thursday, we have manufacturing PMI numbers for British pound. PMI numbers are it's a leading indicator, so that will be important. Going into Thursday, we also have PMI numbers for US here, and again, that will be important. Friday is another very, very important day for the US dollar. So the focus really will be on the US dollar for this week. So on Friday, we have construction PMI out of out of UK there. So it will have an impact on British pound. Non-farm payroll number. This is a big market mover as well. So this week, I'm expecting a lot of volatility from the US dollar side, just because we have FOMC as well as non-farm payroll. just the non-farm payroll on its own tends to be market moving. So you combine the two, that will definitely have an impact on the market. So expect volatility in the US dollar. The others are okay, that we do have some data for other crosses or other currencies, but US dollar will definitely be the focus for this upcoming week. All right, so let's move on to the charts now. We will start off with our euro US dollar here. We've had a big week for the euro dollar here. We are all the way up into this previous level, and so we saw this huge drop. And since then, market just sort of consolidated around here. It didn't break the low, and now it has been going up. So after this drop, now we have filled this entire, see how illiquid the price was here? All of that has been filled. We are back to those previous highs that we haven't seen in quite some time. At this point, if we take a look at this chart here, so we have this, a pullback, and then we are looking for another move to the upside. So that's sort of what we are seeing right now. The only thing that will change this will be the FOMC and the data that comes out of the US. At this point, I'm not really expecting Fed to be very bullish because all those tax cuts and stuff like that they're doing in the US. If the Fed keeps on raising rates, it will negate some of the impact from these fiscal policy perspective. So as a result of that, I'm not really expecting a ton of bullishness out of them. So what that means is we could see, if they show dovishness, if they're neutral, then it's okay. But if they show any kind of dovishness, we could see this go up all the way back into these previous levels here, because we are doing this sort of move here. That's what you would normally expect from this type of a move. So coming back to our analysis, we are almost at this level that we were looking at last time. So now the focus will be on the next levels to the upside. So 128.80 will be the target to the upside. The outlook here is bullish for euro US dollar. We could see a drop or a pullback, I should say, like this, and then the move back up. And once we get past this 125.80 level, we are looking for this type of a move. So that's what I would be expecting. Pullback, and then another push to the upside. And if we break this previous support and resistance level, which comes all the way here, 125.80, then we're looking for another move to the upside, and the target would be 128.80. And if the Fed is bearish, then that move will basically could happen quite quickly. So that's the outlook for euro US dollar. Next one here, let's take a look at British pound. British pound here, we are filling this inefficient move to the downside from Brexit. We are pushing higher here. So this is also bullish. We have a bullish close for the week. In this case, I would be looking for a further move to the upside. So outlook for pound is also bullish. And in terms of the type of move I would be looking for would be something like this. I'm looking for pullback. We could get a pullback here and then another move to test this week's high. Once we break here, looking for a similar move in British pound as well as we have seen in the euro. So this type of a move. So as we can see, the bias still remains to the upside, and it has over the last little while, the bias has turned very, very bullish here. So last few weeks, if you take a look at it, all the candles are green and they're still staying green. So big move up. So looking for a bit of a pullback back into 1.3950 level. And then first target would be 1.43 level, and then the second target would be 1.4750. Now, with all these US crosses, we do have to keep in mind the FOMC that's coming up, which will have an impact on us because it will drive the US. So that's something to keep in mind. But other than that, as the technicals stand right now, everything is looking very bullish against the US dollar. So here we see Aussie dollar here. It has been one-way street for weeks now, very, very bullish. We are into this previous resistance level, and we have closed high into this. So what that means is that we could see the price go further. So we're looking for a break of this level. So this level has not been broken since July of 2017 or September of 2017. It hasn't been tested since then, but it hasn't been broken since March of 2015. So it is a major resistance level, but when price closes like that so much into it, it shows that the momentum is certainly to the upside, and we haven't had even a single red candle close all this time. So there is a lot of momentum to the upside in the commodity currencies here, Aussie, US dollar. So our bias stays to the upside for now. And the target here would be 0.8298, so about 8,300, 0.8300. So in this case, important thing to keep in mind would be to look for a break, a pullback, and I want to see the price hold above this level for it to continue upwards. So that's the type of move I'm looking for. Target would be 0.8300, but first need to see a break. Then if price stays above this break, I don't want to take the break because it could just clear all the stops. So I expect a lot of stops on the other side of this. So if we take a break, it could just be running the stops and then pull back and drop. So I want to make sure price first breaks, pulls back, stays above, and once it holds above, that's the time I'm looking for a long. So bias is to the upside for Aussie dollar. New Zealand dollar here. For this one as well, bias is to the upside. We are into this resistance level. As we can see, we have seen the price drop here. And as we can see previously, last time price came here, we saw a weekly candle close to the downside, and since then we have seen a drop. Now with this one here, the difference here was that price was already dropping and that was a pullback. And this is a little bit in, on the opposite side where price has the momentum to the upside. So of all the different currencies against the US dollar, New Zealand dollar is probably the one who is not as solid right now. So, but having said that, I'm still looking at the bias here as bullish. So in this case as well, I would look for a pullback. To look for a pullback sort of maybe into 72.50 level or even into this 72.80 level, and then looking for a move to the upside. So first target would be 0.7430 level. And once the price is able to break to the other side, holds above this level, then I'm looking for another move to the upside. So again, between Australian dollar and New Zealand dollar, Australian dollar is the one that is stronger at this point. But once we see a break to the upside, we could see the price go to the next level, which is 75, 70-ish level back over here, or this. So let's say 75.50 level. So again, bias to the upside there. Dollar CAD has broken below this level here that the price was holding below, and then we saw the price push up. So this is from the daily perspective, and we were looking for price to hold below this 1.2380 level, and it did that. So as we can see from the weekly perspective, this is looking quite bearish as well. Price did pull back here from weekly perspective as well, and it has dropped further. So this is looking bearish. And in this case, I am looking for price to drop further. So the first target would be 1.2120. And then after that, Okay, so that's the first target, and then we are looking at this one, 1.1950. So basically the bias is to the downside. That's a very solid close for the week. So target here would be 1.2120 level. In terms of dollar weakness, I do see dollar weakness, and it's not letting up. I was expecting actually dollar to strengthen in early in the year because it's just been battered for so long now, but that has not been the case. Nothing's really supporting the U.S. dollar at this point. There's a lot of political uncertainty in the US is certainly not helping, and some of the data hasn't been as good. But regardless, that's one side. But then we are seeing more of positiveness from other countries as well. So all these Brexit negotiations, we are seeing positive comments coming out of it. So UK saying they will be able to maintain access to the European markets, which is really positive for UK because they need to trade with the EU. So stuff like that. So US dollar weakness, I am looking for more US dollar weakness, but FOMC here will be very important. And if FOMC is bullish, if the Fed is bullish, then that's the only way I can see US dollar strengthen at this point. But do keep in mind, though, the market is turning very bullish at this point. The sentiment has turned quite bullish for all the different crosses. So if we take a look at Euro, that's a huge move to the upside. And we haven't really seen anything in the opposite direction. So what that means is that everybody who's long here, they haven't really taken their profits. So we could see pullbacks. And we could see a negative week, a move to the downside, a pullback to the downside as some profit taking comes in. So that's something we'll have to keep in mind. So I am bearish on US dollar at this moment, but I'd be cautious. So that's what I can say. I'm trying to avoid the US dollar because it has been volatile. Only thing I can see is everything is bullish against it. So it is weak at the moment. Euro Swiss franc here. Euro Swiss franc, we were able to break that trend line that we had talked about last week. Big drop here to the downside. So let's take a look. We can get rid of all of that. In terms of our targets, I am looking for further move to the downside. That is quite bearish. But do keep in mind, now we are into solid resistance here, 1.1580 level here. We haven't broken this, but that's a very bearish candle. It engulfs the entire price action to the other side. So having said that, what we could do is we could see a pullback into that level, and then a further, once the price breaks the low at 1.1587, we could see a further drop. So what I would look for is something like this. So first target would be 1.1580. And then if once it stays below this level, we're looking for it to hold below this level. And then I would be looking for 1.1470. So this will be the target to the downside. So bias is bearish, but I'm looking for a little bit of a pullback there. And then once the price once the price goes below this 1.1580 level, a drop to the downside. Pound Swiss franc, same story. We have seen quite a drop in this. This is looking bearish as well. Again, we are into important resistance level, which will turn into support here. So we are into that level, but we saw a very good double top in this, and now we have seen a very good bearish candle here. So this is again engulfs the price action from the previous 2 weeks. So that looks bearish. For this one, the target will be to the downside as well. Bias is bearish, 1.29. So I would say about 80 level. So 1.2980 will be my target to the downside. And we could get rid of some of these. So that's where we are. Again, we need to see a break of this level, which is 1.3200, and then I would be looking for a drop. So we need to see price to break, hold below this level, so go and retest this level again, and then look for a drop to the next level, 1.2980 level. So that would be, so bias is bearish there. Dollar Swiss franc was the trade of the week. It just fell off of the cliff there. So this is our normal continuation pattern here. Price drops, consolidates. This is our flat pattern, and then drops further. So now we are into that. We have seen that drop. And that's a huge candle for the week. So at this point, bias is bearish still. And this is why I'm saying things could change, turn around a bit. So I'd be cautious, but I'm not willing to go completely bullish on US dollar at this point, but I'd be watching the market. I'd be cautious about it because that's a big drop. So at some point, we do need to see some pullbacks and stuff like that, right? Which is normal that I would expect from profit taking. So for now, I'm looking for a bit of a pullback into this previous support and resistance level at 0.9430 level, then drop back to 0.9320, break, and a further drop to the downside. So bias is bearish, but I will look for a pullback first. This would be a good level to watch, 0.9420 level. Once price stays below that level, my first potential short entry will be below that. And once price breaks the low here, then I'm looking for price to pull back, do a test again, and then drop further. Again, with all the US dollar crosses, FOMC would be a big thing this week. All right, so now we are into pound CAD. So from daily perspective, pound CAD is looking bearish here. But let's take a look at our weekly here. So with the weekly, it is kind of ambiguous here. It's neutral. We do have a long pin on top, but we have a green candle close. So this, I would say, would be bullish to neutral. For this one, important thing there are two targets I would set. So this is how I will look at this. Once I'm looking for price to potentially test the top again and then drop. So kind of like what we had talked about pound Swiss franc here, we saw a double top and then a drop. So that would be the first scenario, my base case scenario that I would be looking for. So last time, if we take a look at it, see there's another candle that looks very much like this candle right here. And see this candle here? So we saw pins, and then we saw green candle, large pin, green candle, large pin. So that's why I'm saying it could go push up higher, but it started to run into trouble here. So I'm looking for price to test the high again, 1.7650 level here. If it doesn't break above this, I would be looking for a potential short here, but we do need to keep in mind what pound is doing because that will get reflected here as well. So, but from this perspective, so that's my base case scenario. The second scenario would be that price goes and tests this level again, 1.7650, and then it breaks through. In that case, I would be looking for a pullback into the same level again to test this level from the other side, and then to go to the next level, which is our top that we haven't seen, or the resistance level that we haven't seen since May of 2017. So that's sort of how I would be playing this one, pound CAD. Let's take a quick look at yen crosses here. Yen is looking, yen crosses, I should say, yen is looking strong, yen crosses are looking weak. We have a pin bar here, weekly close is into the pin bar, but we are into resistance here. So based on our pin bar, I would look for price to drop. And this will be similar to what we had talked about Euro Swiss last time. I'm looking for price to do one of these, go and test the trend line, because this trend line has been in place for a while. If it breaks, then we could get similar scenario to our Euro Swiss franc, where price drops into the next level. So my bias for this one is bearish, and I'm looking for a move back into 149.80 level. So the bias here is negative, but the first would be somewhere in here. So about 150-200 will be the first target. Let me actually hold this up. Here we're looking at about 150-150 will be the first target. 149.80 will be the second target to the downside, but the bias is bearish. Euro yen here. Euro yen has been trading in this range, or had been trading in this range for some time, and now it seems to want to come lower. So it hasn't broken the high here. At this point, it's not hugely clear, but I am seeing this as bearish. But we are into support here as well. So this is strong support. Price wasn't able to break this level for a long time. And now I would expect this level, 134.50 level, to give it trouble on the downside as well. So I want to see the price close on the other side of that level, and then I will then I'm looking for price to drop once price does that. So once we see a drop here into this area, this range here, then I would be looking for this type of a move back towards the bottom of this range. So we're just shifting from the range bound market up top to the second level here. So this is the close, weekly close is bearish. My bias is bearish, but I want to see the break below 134.50 level, then do a test of that level from the other side. Once that level, 134.50, starts to act as resistance, then I'm looking for a drop into 131.50 level, into the bottom of this range right here. So that's the type of behavior I'm looking for. Bias is bearish for Euro Yen. Aussie Yen here. Aussie is interesting. We have not been able to break this one either, so the bias on this one is bearish as well. But we have to be careful with what Aussie dollar does, because if Aussie dollar turns very bullish, this could go to the next level as well, or at least go test the high once again at 89.00. But for now, because it hasn't broken the high in the last 4 weeks, that means there is really not enough momentum to push the price to the next level. So I'm looking for price to drop here. In terms of target, my first target would be 87.20. And then once we can see a clear break of that level, so I'm looking for price to drop. 87.20 is the first target. Once we can see a break below that, then, only then, I'd be looking for 85.92, so about 86.00. So that's the type of move I would be watching for Aussie. Dollar Yen, last one. Dollar Yen, just like dollar Swiss franc, has been very, very weak. So this is what we're seeing right now. So that's a very bearish close here. Now we are into support. So this level here, this level. So price is sort of getting into those levels that we haven't seen in a long time. So the bias here is bearish as well. And we could see a pullback into 109.80 level and then a drop. So kind of like this. So I'm looking for a bit of a pullback, in the kind of the US dollar process, just because going into FOMC, market participants may want to take some of their positions out before, instead of risking everything on FOMC. So people may be wanting to close some positions. As a result, it will create a move in the opposite direction of the actual trend that's in place at the moment. Which could give us some opportunities to trade. However, I'll be very cautious with the US dollar because I expect a lot of volatility in the US dollar this week. So for this one, my bias is to the downside. I'm looking for a pullback into 109.80 level, and then first target would be 108.20 level. And once price breaks that, holds below that level, 107.20 will be the next target after that. Okay, so that's that. And Aussie CAD. Aussie CAD, that's not a pair I tend to trade. So let's take a look, and we'll do gold in just a moment here as well. Let me find that Aussie CAD. Here we go. All right. Okay. That looks bullish. Here we are. Australian dollar has been quite bullish. So that looks like a bullish pin bar on the weekly. So we have room to the upside here. See how this dropped and did a test? That's what I mean by the test. What tends to happen a lot of times is, see how the candle was very, very strong. When it closed here, then the price pulled back and then closed up bullish. So that's what I mean when we talked about those. If you're wondering what does a pullback mean, and I've kind of received that question in the comments on the YouTube channel sometimes. So if you're wondering what a pullback looks like, this is what it looks like. The weekly close was very bullish, then price dropped, came into this previous resistance level, which turned into support. See how price stayed above this level, and then it pushed up from there. So that's what a retracement or pullback looks like. Now we have a bullish pin bar here. So in this case, I'm looking for price to essentially go up. So looking for a break first, and then a pullback like this, and looking for price to move to the next level, which is 1.00, this previous pin right here. So that's the analysis on that. So that looks bullish. Let's take a look at oil, since we're looking at Canadian dollar there. Very bullish close. See how price broke above this previous high. So that's what the break looks like. And now we have our bullish close here. So for oil, it looks bullish as well. So oil, I would expect this, looking for price to go into the next target, which is 69.33 or 69.30. So pull back into 65.28 here, and then a further move to the upside. So if oil looks bullish, then Canadian dollar will be bullish as well, which means dollar CAD will be bearish. Let's take a look at gold. Gold is bullish as well. So we had a bearish to neutral close here. Price broke through the high, and now we are looking bullish. So this is where we are. We're coming into resistance now, though. And gold sort of moves in the opposite direction of the US dollar. So if price US dollar is weak, gold tends to go up. So in this case, let's take a look. What are we looking at? The bias is to the upside, but because we have the FOMC, I would be cautious in this one. I would look for a pullback like this, and looking for a retest of the high at 1365. Once we see a clear break, and there has to be a clear break, and then the next target will be 1374.80 level. That will be the next target to the upside. So I'm bullish on this one, but looking for a bit of a pullback here and looking for next move to the upside. So I would be very cautious, though, with the US dollar, anything that is impacted by the US dollar. So that is the analysis. And here's a question: how do I decide which pairs to trade? Is there a max number of pairs to trade? So I would say keeping the risk low. So if we have too many trades on, even if the risk per trade may be small, but it gets compounded, because if you take 10 trades, then you're essentially, even if you're risking 1%,
all those 10 trades together will give you a 10% risk on your trade. So that's quite high in terms of the risk. And kind of the rule of thumb is 1 to 2%, maximum of 5%. But you don't want to be going over that, because what happens is it may look very good in an instant, but things could change just like that, and everything can go in the opposite direction. So I'd be very careful with that. Depending on how many trades you can take will be a function of your account size. The larger the account, the more trades you can carry. The smaller the account, I would stick to the smaller number of trades. And best way to decide which pair to take a trade from, if you're trading longer term, the easiest thing is to look at like a strength meter somewhere, which gives you the currency strength. But if you're trading short term in day trading, it would really depend on what level the price is at. And from there, you could just do a counter trend trade as well. But now we're getting into too much technicality. So that's what I would be. So that would be what I'd say. Another question is, FX Pro good? You know what? I've heard good things about the FX Pro. I'm not really affiliated with any brokers. I do not have any personal experience with FX Pro because they don't take clients from US and Canada. So I am not sure, but having spoken to somebody who is in UK and who has an account with FX Pro, they said they are good, they're happy with them. That was the feedback that I had received. I do use FX Pro for their audio feed, which I can get with a demo account. So that perspective I really like. But they don't, from what I understand, they don't trade against their own clients. They just pass it on. So they're ECN trader, ECN broker. That's what I have heard, but I would suggest you do the due diligence when it comes to that. Okay, so next thing I want to talk about is, let's see. Seem to have lost my, okay, I seem to have lost my weekly analysis. Sorry, here we go. One thing I did want to talk about is the trade room. A lot of people, especially recently, because I'm going to start this challenge called How to Trade a Small Account. Basically, the challenge is going to start this week, this coming week. I'm going to release a podcast tomorrow, so I need to record it right now. What I've done is in November, end of November, I had done a podcast where I had shared some strategies on how to trade a small account. And the strategies kind of include not just the technical side of it, but it is really about the process. How do you become a professional trader? And now what I'm going to do is, so December ended up being crazy for me with the kids being sick and stuff like that. So it was just did not have enough time to get the challenge started. So now everything's sort of back on track. What I'm looking for is, so what I'm going to do is start the challenge this week. So basically, what does that mean? So I have deposited $3,500 in a trading account. I'm going to, it's like showing you what I'm doing behind the scenes. So I'm going to have some worksheets that you guys will be able to access so you can follow along. Of course, you will trade your strategy however you want to trade. So I've basically created some, to create discipline and everything around that, I've created some worksheets so we can track our progress. I will do the same on my end, and every Friday I will be showing my account. So you will see what happened. And the point of this is not that I'm going to be perfect the whole time. It will be a real account, $3,500, real money in there. So it's not a large account, small account. But the point is to be disciplined, to be focused, do our proper analysis and work that goes into becoming professional, trading it like a professional account. And then we will get to review the results every week. And not just that, we will also take a look at what happened, how things went, the good, bad, the ugly, and there will be times when, I will run into psychological issues and you will run into psychological issues in your own account. So we'll take a look at how we come back from that and how do we continue on this journey. So the idea is to do this for a year. But we'll start this week. So so you'll be able to download the worksheets that I've created for you to go along with this. This Friday will be our first actual live review. I will send out the details on that. If you're on my YouTube channel, you will see those come out, or if you're on the audio podcast, you'll be able to see that as well. I will try to send out an email to my mailing list as well, so people can access that information if you're interested. So just keep an eye out for that kind of stuff, so you will be connected if you're interested in following this journey along with me. So all of that will be live, and you'll be able to access that. I have lately been getting questions about the trade room, so just wanted to share that. So in terms of the trade room, there are multiple things that I do. First is the market review. So we start with the weekly market review, which we are on currently. So this is for everybody. But with the trade room, it's a private Skype group that I had, and that's where I generally share my trade ideas, live market commentary, and I do take live trades there. So this is where I will say, I am entering the trade here. This is my entry. This is my stop loss. This is my take profit target. So I post all of those things. I also send them out as Twitter alerts. On the Skype group, people are free to ask any other questions as well and get feedback on any other, charts they may be looking at. So Skype room may have more conversation. Twitter will just have the signal. So basically the trades that I'm taking when I'm getting in and how I'm managing the trades, all of that goes out on the Twitter feed, and that's in the live markets. Every day we do daily market analysis call, which is similar to this call, except it's on a daily basis. So we look at a daily chart and we project the market direction for the next day. So with that one, we go through all the pairs that we did here today as well. And the idea is that if you didn't want to be in the trade room, in the live trade room, let's say you were in a time zone where you couldn't join me in the live trade room because I trade the London session, then you could take more of a longer term trade based on that. So you could take a trade off of an hourly chart, or you can put on pending orders or something like that if you just wanted to test out those things. Of course, I recommend keeping your risk low or trying it out in demo, so we're not just going crazy with it first. So try those out in the demo account, because technically that's not advice. I'm just showing you what trades I'm taking and where I'm expecting the market to go. All the trades that I take, I do have a stop loss and take profit targets in place, which I share with everybody. So you can sort of have a look at that. We do a members only webinar every Friday, which is an educational webinar. So this is more my teaching that I do. So you get some of that education as well, not just the trade alerts. And then I also give you the pivot point indicator, because that's one of the indicators I use personally. So you will get that pivot point indicator. And we are looking at $97 a month. So that's the cost for that. So if you guys wanted to join me, you can go to tradingwithvenus.com, either trading-singles, or you can just go to tradingwithvenus.com and just click on courses or work with me, and you will see that there. And Rajiv is saying, I counted if someone followed your number of pips last week from weekly review, they would have made 500 pips minimum. So yeah, we do the similar type of analysis I do every day, which is looking at where I expect the market to go. All right, so, okay, so that's it. And if somebody needs to get in touch with me, you guys can send me an email. Some people are asking some private questions. If you want to reach out to me, you can just contact me at, well, let me give you my email address here. So my email address is raman@tradingwithvenus.com. So RAMAN at tradingwithvenus.com. And other questions, also the trades that I take in my account that I'll be trading will be the same trades I would call. I would post in the Skype chat room as well. That's another question I have received from people. So that's, so if you have, so basically what I'm saying is every week on Friday, you'll be able to see my live account and how things went based on that. So that's all I have. Hope that answered some of the questions that were sent to me over the last week or so. So you guys have a wonderful weekend, the rest of the weekend, and I will see you again the next time. Bye for now.